Harmon. Greg is an independent trader today, doing some writing for the StockTwits network at dragonflycap.com. Greg, thanks for coming on. Been reading your work. A little background on Greg, right from your own biography here. You founded Dragonfly Capital to provide daily technical analysis of securities markets and consulting services to the marketplace. You talked a little bit before we came on about how you're going to be offering some premium services through the StockTwits network and ultimately an institutional product. You've been in the markets for a while, like I have, almost 25 years, and you've held some senior positions: head of global trading, head of product development, head of strategy, director of equity and portfolio swaps trading at Chase. So deep background, deep portfolio. Thanks for coming on with us today, Greg. I appreciate it.
Yeah, thanks for having me, Matt. It's good to get a chance to talk to you a bit. I've been following your work as well.
Well, thank you. I always like to start with, when did you get interested in markets? You've been at the game for a long time, but did you go to school? You went to school to study engineering as an undergrad. How did you end up getting into the markets?
Yeah, it's kind of a funny story. As you said, I was an engineer at Cornell. I was captain of the swim team at Cornell, and the guy that was the captain the year before me was trading repo at Chase Manhattan.
Okay.
So he and I were trying to get together to get a gift together for the swim team that was going to have their only chance to beat Harvard in like 25 years or something like that. And as we got together, he started telling me that he was leaving his job and I should go interview. And for a guy who at that point in time was running a copy shop on the investment banking floor at DLJ, it sounded like a good deal.
Sweet.
Yeah.
So you finished undergrad and went right to work on Wall Street then?
Yeah, pretty much so. Yeah, with the brief 6-month stint at running the copy shop. Yeah.
Well, that's cool. That's cool. How again, a lot of people don't even know what. Even guys that studied business in business school don't know what a trading desk is. So, kind of fortuitous that you got into the trading world and the markets right away. It's pretty fortunate, I would say, and probably had a great time.
It was very fortunate, and I was absolutely one of those guys that had no idea what the stock market was. Other than Cornell had a big ag section in it, so the big business courses talked about commodity futures, so I knew about corn and things like that. But sitting down with him and then learning the repo market was something very different for a mechanical engineer. So
talk about the repo market, because you finished. You probably came at a time when interest rates had just come off a huge run to the upside, and that's probably why that was such a hot space when you got into it.
Yeah, it was a very big space at that point. The big banks were just coming off of some issues that they had in terms of collateralization of trades. They finally realized that they needed to collateralize accrued interest on the bonds that they were repoing out.
Right.
So that changed the world quite a bit. What I was doing was actually repoing out bonds. And then taking the cash back and buying short-term CP, commercial paper, and just doing a short-term credit arb, essentially.
Basically back spreading your situation and then collecting the VIG all day.
All day long, yeah. It was the easiest job in the world. Put treasuries out. I promise a repo rate on them that's 30 basis points lower than the CP rate. And everything's done overnight.
That's awesome. Had to be a good time. And so how long were you operating in that space before you went back and got your MBA?
That was also the era where most of the banks were willing to, as a perk, send you to business school at night. So I would be done at 4:00 and walk down the street to NYU and go to classes for a couple hours at night. Did that for 3.5 years, and Chase was happy, was nice enough to put me through it, so it was great.
So you were working full time as a trader, and then going to school full time.
That's right. Yeah.
Yeah. So I would say a guy, it would take a guy with your discipline, a swimmer, to do something like that, because not a lot of people can focus two things. And yeah, I went to Michigan and I hung out with a lot of the guys on the swim team, and they were nutbags like that too, where they would, swim 6 hours a day, go to school 6 hours a day, and then go out for, 6 hours a night. And
it's certainly created that kind of discipline where you had to do things and get things done when you had the time to do them. So
what was your swim? What did you race?
I swam the mile, 1,000-yard freestyle on the 1650
mile. And what was your PR?
And in the 1,000 it was 9:48. In the 1650 it was 16:30. That was not great. That's why I was in an Ivy school instead of Michigan.
Well, that's still impressive. Again, just the discipline to show up and do that sport. It's all about repetition. I learned from those guys and watching how disciplined and how they were just tough. So hats off. So you're doing repo, you get your MBA, and you continue in the same role there for a while. And when do you start transitioning to get your CMT, CFA? I think you have a CFA. Maybe
I do have a CFA.
Okay.
Yeah, I stayed in that same role trading repo, but moved up to Boston to do it at State Street.
Okay.
They asked me to go run global trading for the securities lending, securities finance business out of London, and I did that up through 1999. And then after that, when I came back, is when I started moving into product development, is when I started going to get the CFA.
Okay. And so again, right, I always like to look at the time frame. 99 stocks start taking off, and you'd had some international trade experience in different trading desks, and now you're hopping back to the States as equity markets are kind of peaking.
Yeah.
And did you have your CMT and CFA by that time?
I did not. I started the CFA in 99, finished it in, I guess, 4 years. Because I was trying to build a prime brokerage business for State Street at the time too. So, and I had gotten more interested in the hedge funds, and yeah, as you said, the stock market was peaking. People that I was trading with, especially when I was in London, were doing all sorts of tax dividend arbitrage trades.
Right.
So I got a lot more interested in the short side of the market, which led me to the hedge funds, which led me to, how do I get a better handle on this? I'll start looking at things that can get me better tools on valuation, and went for the CFA.
Okay, so again, kind of personal reasons. You're thinking, how can I? This bubble is brewing and growing, and I want to look at more downside protection. You're already on bond desks, trading desks. Most traders are more comfortable, I would say, coming from that background on the short side. Would you say that was true for you, Greg?
Yeah, absolutely. Certainly, trading repo for so long got me very comfortable with the short side.
Well, because fundamentally, you saw things that even short sellers, I would say, don't see from a fundamental perspective. So that's a fascinating background, I think, that you've got, is one that fundamentally you saw the destruction that happens within companies on the commercial paper side. And then obviously you had an inclination and interest in looking at the charts and the technicals. So you marry those together, I can see you being pretty darn dangerous.
Yeah, it's surprisingly, the technicals really only came in about 7 years ago.
Okay.
7-8 years ago. When I left State Street and went down to BNP Paribas to trade derivatives. That was a much more focused, back to rolling up your shirt sleeves and nose to the grindstone trading for hedge funds, essentially, trading in and out of swaps for them. So they were relying on me there for the technical levels to get in and out of trades.
So talk to us a little bit about that and that experience. Like, what was your most positive memory and maybe big. I always like to say a great trade and a trade gone awry instead of bad trade.
Yeah. Well, as it turned, we'll come back to that. In the short term, it was a tremendous opportunity to not only try and build a swaps business for BNP, but also to get more experience using the technicals to trade in and out of positions. And the best pieces of that were, talking to, as much as you talk these days, chatting with the traders at the big hedge funds and them, offering up their accolades and rewards for doing a great job for them.
Right. So basically, you were coming to guys and saying, "Hey, I got this idea. I think open table at $110 is looking, pretty overbought. Got to be careful on the long side here. We're starting to sniff around on the short side. If we break this price level, we recommend you put on a trade and put on a position as long as it stays below that level, that type of thing."
That type of thing. And then there was the other end of the spectrum as well, where they would come and say, my PM really wants to get 2 million shares of XYZ, but where do you think is a good level to get it? And how long would it take us to get it? That kind of thing.
Gotcha. So, again, guys that are looking to get into positions, long or short, did you ever, again, you're kind of working on the sell side here. So, did you have a situation where you had a guy like that who maybe wanted to buy and you were like, man, I wouldn't really recommend buying that stock here, even though they wanted to. And, like you said, the PM wanted to buy it. Was that your job to try to change It
wasn't my job to try and change their mind. I would certainly express my opinion about it, and sometimes it would stick. That had more bearing in terms of whether or not the trader at the hedge fund was powerful enough versus the PM there. Right.
That's interesting. It had to be a tough time too, because things were flipping and flopping and changing so much, the volatility.
Yeah. So it turned out to being really being able to read charts on an intraday basis. So more often than not, they were coming and saying, "I have to do this. Where's the good level?"
Gotcha.
As opposed to letting it wait.
Yeah. So now, with the fundamental background on the paper side, would you say that how would you describe your technology to somebody, or not your technology, but your ideas and how you come up with your ideas? Mm-hmm. Would you say you're purely technical with a sprinkle of fundamentals? How do I always like to ask people, how do you look at yourself when you're looking at how you look at the market?
Yeah, I think that the fundamentals play a role for me strictly on a macro basis, but not on an industry basis and not on an individual stock basis. Other than avoiding earnings, right? Avoiding events, things like that. So my process is in terms of trading. Everything that I'm doing now is more short-term focused.
And define your period of short-term, because everybody's got different short-term.
Sure. I would call myself more of a swing trader than towards a position trader. So hold positions anywhere from a couple days to a few weeks. Yep. And there are exceptions to that. In December I bought oil and held it for 3 months, that kind of thing.
Right. I was always when I was working for different hedge funds and as a trader and running my own fund, I was definitely technical chart guy, and I was similar. I'd always tell people a day to 6 weeks was my typical holding, period. 10% of the day I'm gone. That was kind of a rule.
Exactly.
But, you've got rules within the game around that. So when you're developing give us a little background on how you develop your ideas, because you're pretty prolific on your, at Dragonfly Cap. I enjoy reading your stuff and looking at your charts, and I end up nodding my head and doing that. And I always hat to people that can write about markets the way you do. You're a good writer, and I think that's probably because you are a mechanical engineer again, and the way you lay your ideas out is very structured. So when you come up, give us a little run through of how you come through your process of kind of macro down to micro and finding your ideas.
Sure. Yeah, starts at 4:30 on Friday afternoon, and I start looking at the equity indices. I don't look at the futures for the equity markets in that I'm trading the SPY and the IWM and the Qs, not the futures.
Okay.
But I want to know what's influencing them. So I also look at 6 other factors that I think do influence the equity markets: gold, oil, treasury bonds, the dollar, and then I look at 2 foreign markets. I look at the Chinese market and then the emerging markets ETF to see how they might influence the markets. Keep an eye on the VIX as well, although that seems to have been a useless effort the past 4 or 5 months. And I look at all those factors on a daily and a weekly basis every Friday afternoon.
Okay.
From there, sleep on it a bit, and then the next morning take a look at the sectors within the marketplace. I use, again, the proxies that I can actually trade. So I use the spider sector funds, the XLs, and look to see, what sectors are showing strength within the marketplace. So from the Friday afternoon, I've kind of determined the trend and what I think might influence the trend. And that's the key for me. And then within the trend, where is the strength and where is the weakness? And from there, I start looking through my whole environment of charts. I've got about 800 charts, individual names that are in my universe that I take a look at every one of them. I used to, some people that follow me for a while will say, man, he's not posting much anymore. I used to post about 200 charts every weekend. I'm down to about 30 or 40 now that I think are important.
Yeah.
And out of those, I develop my watch list just like everyone else does.
So
I'm looking for some diversity within those sectors that look strong, as well as some contraplays that might be in the sectors that look weak in case there's a reversal that happens.
I see. So your 800 names, are those rotating? There's probably names moving in and out of that environment, Greg?
The 800 is pretty stable. To be totally honest, the names come in as people that follow me just ask me what I think about these stocks. Mm-hmm. And if I see that things are getting a little stale in certain sectors, I'll ask, what are people looking at in pharma, for example?
And then what about liquidity? Is liquidity something that you're, as part of your trimming down of those names? I mean, you're looking for stocks that trade either a certain market cap or a number of shares or a combination of?
Yeah, less market cap, more price and number of shares. I'm looking for things that are 400,000 shares a day or more.
Okay.
Generally, if looking for over $5 to $10, somewhere in $5 to $30 is probably my range that I focus on. Things that start to get to triple digits, I'll tend to look at more on options basis to be able to leverage that a little better. But I will still also trade some stocks that have less than 100,000 shares traded on a daily basis. A couple I keep following all the time are like Hook, the brewery company
up here in Portland. Yeah.
Mm-hmm. Yeah, and Cherokee, the clothing company.
Okay.
I look at bank out, Southwest too, Ozark Bank.
And are those? I'm going to take a guess here and make an assumption. Are there fundamental reasons you like those stories? Again, maybe you've done some homework on the paper there that you like.
No fundamental reason at all. It's all based on technicals. I use a combination of candlestick charting techniques. Look at patterns, so your symmetrical triangles, your pattern breakouts, things like that. Overlay Fibonacci's and Bollinger Bands.
Yep.
And look at some momentum indicators, mainly just RSI and the MACD.
Yep.
But really more to give me a sense as to whether they support or not what I see in the price action.
So, not to be crude, but I'm going to make a lame attempt at a joke here, but you're kind of like a Congressman Weiner. You're a picture guy.
Yes, absolutely.
So
I send out a lot of pictures, just not the same kind.
Yeah, exactly. No, I'm the same way, and so I always like to talk to guys like yourself, because to me it's pretty simple. I don't use a lot of, even though you're a technician, I'm a technician. You're not using a lot of funky indicators. It's mostly price, the pattern, simple momentum indicators, as you said, RSI, MACD, basic stuff out of the box. I use all the same thing, and I'm just looking at For me, I want to get your 2 cents here, but for me, the chart is nothing but the psychology of the marketplace.
Definitely the psychology of the marketplace, and that's why there's a lot of people that I see that are out there doing charts and on the Twitter and StockTwits stream that I follow that are only looking at 3 or 4 or even 6 months worth of price history.
Right.
Don't realize that the sentiment that happened at a price level even a year ago and more can still be very important.
Yeah, it's the same thing. It's like you keep seeing people trying to catch knives on, RIM currently right now, and I said you can't stop it. It's going to 35, oversold for sure, but forget about it. It's got to get there just because that was the low 3 years ago. Yeah,
that's oversold, overbought. Those are two of my 2 terms that really get into my head and make me cringe. I told you I use RSI, I use MACD, and RSI especially can get pretty high on some stocks depending on what time frame you're looking at.
Right.
But just because the RSI is at 90 doesn't mean it can't stay there for another month.
Correct. It's definitely a time to be back spreading, but probably a time to be getting short. But like you said, it can go on longer than you can sustain. So you better protect yourself if you're going to short something with a 90 RSI, because it can go to 95, another 50% higher, especially back in the 96 to 2001 days. I saw that over and over again. So. I'm curious, let's switch a little bit. Like you said, you're working on an institutional opportunity with StockTwits and positioning some of your market research and selling it. How do you utilize social media, Twitter, and how do you think the new media is changing the way Wall Street operates? As you said, guys kind of changed. 9/11 was one thing, just all the, I'm drawing a blank here, but, Starbucks changed the way that people operate. So this game is always evolving and everybody's always trying to find an edge. Charts always stay the same. That's what I love about charts, even with all the fundamental stuff and the insider stuff. You know what? To me, the chart doesn't lie. It always tells you price is the only thing that is the ultimate arbitrage. So, how do you use some of these tools that are out there, Greg, and I'm sure they've been beneficial to you?
Yeah, I'm all over Twitter. Definitely out there, in and out every day. Not just, maybe I think the end result is that it ends up being some marketing and brand building for myself, but it's more really in terms of trying to educate the general public.
Right.
Or anyone that happens to follow me. I think that there's a lot of noise out there.
A lot of static, yeah.
A lot of static. Some of it comes from the other media, from television. Some of that is important. Some of it's not important, but creates another layer of noise. But even within the Twitter sphere, there's a lot of noise out there as well. And if you know that, it's I think almost irresponsible not to help create a better, more viable backdrop for that noise than letting people that are just spewing crap continue to spew crap and confuse and help people lose a lot of money.
Yeah. Yeah, I agree with you. It's, there's some powerful tools out there, but, learn from the folks out there is always what I tell people. Follow, a group of people and, you've been at this game longer than I have. I've been at it nearly 20 years. You've been at it 25. And, I learn every day. And, that's always that's also what I love about this business. And that's why I love doing these interviews is I learn as much, and hopefully our viewers learn as much from the composite of you and I sitting down as anybody else does, right? So,
and I think that's the other key to social media is that, I've got my own views and my own opinions and they're not always going to be right. So being able to share them with others and get comments and feedback, is very helpful too.
Yeah, absolutely. So a couple more questions. I'm just curious. You're a technical guy, and I traded stocks and options for a long time, really for 12, 15 years. And then I kind of flipped and got into the futures marketplaces because as a trader, I prefer them. I know you look at some of these things, but you don't trade them. Is that anything you've ever gotten into?
Yeah, it's an interesting question. And a lot of people have asked me about that before too. And, when I do look at, things like, the dollar index and then moving over to currency markets as well and looking at, the technicals there, they do seem to be much more purely technical driven markets than the stock market.
They are.
So I ask myself that occasionally too, why do I not do that? And really it's because, I've got such a grounding in the stock market and I understand how stocks trade. I understand what can cause a short squeeze. Having, managed the securities lending desk at brokerage firms, I know how those things can work.
Right.
I don't have that same kind of confidence and understanding of how the futures market works. And that's really the main reason why I don't do it.
And that's fair. That's a good answer. Again, good objective thought process. And I always tell people they are different games. And it did take me a few years really to learn the biorhythms of the futures marketplace prior to really going full gas into it, because it is in every one of the even I would say even the last couple of years as grains have become a bigger portion of my trading day. Oil trades differently than the grains do. The ES trades differently than all of them. They all have their different biorhythm, and so it's important. But I still contend they are, in my opinion, and they are the purest trading vehicle out there for technical traders and for surfers, if you will, the guys that like riding the wave. So, I would just
and I've got friends that have traded oil for 15, 20 years, and I know that there's a lot of things that they know about what happens between contracts and rollovers and seasonalities that I just don't understand.
Yeah.
And without, looking to get into those markets and something like a, day trade or an hour-long trade perspective, I feel like I'm putting my head on the chopping block for them to have.
Fair enough. And then again, it's smart and logical to think that way. So Greg, you've got, we talked a little bit again, you're giving a webcast in mid-July with the MTA, the Market Technician Association. You said you don't have any information. I'm sure you're going to have posted on your blog here coming up.
Yeah.
And folks should look out for that. What are you going to be talking about for that?
Yeah, well, we had talked earlier about my process to get ready for the week. That it starts on Friday with that macro review on the daily and weekly basis on all those indicators. I do step back from that at the end of every month and look at those same indicators on the monthly charts as well.
Okay.
And my talk at the MTA will be around the longer term macro view on the equity indices, as well as the influences on those indices I talked about before: gold, oil, dollar bonds, foreign markets. So I'll spend some time going through that, and then try and weave in a bit the shorter term weekly factors that can influence that. Because it's important to know what the long term looks like, but unless you're buying something and putting it away for 2 months, you need to also know what the weekly and daily charts are telling you to.
Yeah, again, absolutely. Know your time frame and trade your time frame. Not everybody, this is, again, something that's difficult to teach people, but if you're a trader and George Soros is getting short gold, doesn't necessarily mean you should be getting short gold, just because his time frame is probably much different than the typical small retail trader. So keep that in mind.
Yeah, and I think that's one of the more confusing things to novice traders when they look at the people that they follow on Twitter. If they don't really understand the difference in the time frames between me and 4 other people that they follow, it can certainly be very confusing that I'm looking to sell something and someone else is looking to buy it or go short.
Exactly.
And we're both right. We can both be right.
Absolutely. Again, point well made there, Greg, because it's absolutely the truth. So let me finish up with kind of like you said, you're a macro guy, you're a big picture macro guy, and you trade within that. What are you watching right now? Because these markets, I don't know about you, but you've been at it longer than I have. I'm more and more short term than I ever have been in my trading career. I have less interest in big macro type swing trades because it's very confusing. So what are you watching right now, macro wise?
Yeah.
Give me one or two things that you're kind of keying on, just to, not a trade necessarily, but what are you watching?
Yeah, and I feel kind of like you. I'm over 85% cash right now. What I'm looking at in terms of the macro view is I think that the SPY has been within a bit of a range. It's coming down to that point now, maybe 128, 127 in that area, where it's going to be either a bounce or we're going to start a downtrend.
Right.
And I'm watching that combined with what's happening with bonds. I think that treasuries, from a pure macro and economic perspective, look to be setting up to be a very good short at some point in the future. But the charts right now say it's not now.
What do you which treasury do you focus on? The 10-year?
No, I've been looking at and trading mostly the TLT, so
Okay.
the 20-year plus ETF. But I do think that the 10-year or the shorter iShares one, the IEF 7-year, also looks pretty positive now too.
Yeah. And when you say positive, are you looking on a daily chart mainly?
Daily chart, yeah.
Yeah. Yeah,
put some of
that I follow the ZN contract, which is a 10-year future, and we're getting right at the 50% retrace. We talk about fibs, and then on the daily, and then that 61's right here. So I agree that these are things that I'm watching, and it's either we're going to bounce again on the ES at 1280, same numbers you're talking about, which is where we are. We're trading 1282 right here today. We touched 1276 overnight. But if this area doesn't hold, I think we might be a little early. I think we might have one bounce here to maybe 1315 or so, 1315, 1320. One more bounce, and then possibly a bigger move, 10 to 20% move, because we haven't had a 10%, 20% drawdown in this market in two plus years now. So
yeah.
a long time.
Yeah, and then the other factor I think that's a major player right now is the dollar index.
Yeah.
I really think that the dollar index is dead.
Yeah.
It's just been bouncing off the lows because people have been thinking that how can it go any lower? It's never been this low before.
Right.
But the macro picture sets up for that to go lower, pull the treasuries down with it.
Right.
And if that happens, I don't know what happens with the SPY yet.
Right. Again, you've had all assets moving together in counter to the dollar, so it's a tough thing. I think at some point these things have to start normal correlations, and it's been a long time since we've had normal. But that is again why I don't want to be long, I don't want to be short. And like you said, I'm mostly cash and staying intraday, shorter and shorter time frames, because it can go a lot of ways right now. So.
Yeah, right, Greg, my last big macro trade was September, when the Fed statement came out and said that they wanted to create inflation, and with the interest rates at zero, if you want to create inflation, there's only one way to do it. And, that's played out now. So now it's kind of sitting around saying, what's next?
Yeah. It's definitely tired. And again, this is something where, on a macro basis, you start watching, people say, oh, well, oil still could go. I'm like, well, it broke. I mean, it broke from 115 to 95. Corn, wheat, they've all broken. They've all, can't come back and touch their highs. That to me is a precursor. Lumber never got going. It still isn't going. Again, these are all telltale signs that probably, again, most mom and pop retail aren't looking at, and probably things that you continue to talk about. Again, I think back to your blog post last week with the cow and corn. I like that. That was a great post. And again, so folks, check out Greg Harmon. If you're not reading him, he's at dragonflycap.com, which is on the StockTwits network. And, look for his work. He does, as he said, he does a lot of free work, and it's good work. And you guys should be checking it out and reading more about it, because I'm, part of the thing that I find on social media is ideas and sharing of ideas, and maybe a chart I hadn't looked at. So that's where Greg comes up with his 800 ideas, and I do the same. It's like, show me things that you're looking at and people are looking at. even if it's a different idea, I want to see it. So
that's great. Thanks. It's been good to talk to you.
Yeah, I appreciate you coming on, Greg. And again, your time is well respected, so I'll cut it short here. But we'll have to do it again because I learned a lot.
Okay, great. Thanks, Matt.
Okay.
Talk to you soon.